Hello, I'm Jessica Amir from Bell Direct, and today I'm chatting with Chris Brycki from Stockspot. Chris, thanks for coming in today.
My pleasure.
So, ETFs, there's so many in the market. We're talking about how do we pick a good ETF. When I'm looking at an exchange-traded fund as another way to diversify, I look at three key things. What is it going to get me exposure to? How has it been performing? And what are its fees? What are your key metrics that you look at?
Well, I think they're perfectly good metrics to look at, and you're right, it's really important to have some figures that you're looking at when comparing ETFs, because these days there's over 200 ETFs listed on the stock market. When we're comparing ETFs for our clients, and we've been researching this for the last 6 or so years, we found that there's 4 metrics that you really need to focus on in order to work out what's the best ETF for each asset class. And they are, first of all, fees. We know fees are important because high fees are a drag on your long-term return, so we look for ETFs with lower fees, ideally less than 0.25% per year. For some asset classes, that's not possible, but that's the sort of benchmark that we're looking for. The next one is size. So you want an ETF that has more money under management, and the reason is that some ETFs do shut down, and you don't want to be stuck in an ETF that shuts down. You want to be in one that survives, and the typical size that an ETF needs to get to really ensure its survival is about $50 to $100 million. So unless you're in an ETF of that size, you've got to be a little bit cautious that it may shut down. So size is the second factor. The third one is liquidity. You want an ETF that you can get in and out of easily. Now that doesn't mean you need to trade it often. In fact, we recommend clients don't trade their ETFs often, but when you do want to get in or out, you want to make sure there's a buyer or a seller there for you, and you don't want to have to rely on the market makers. You want to ideally rely on other buyers and sellers to take the other side of your trade. And so liquidity measures how much the ETF turns over in a month. Yeah. And then the final figure we look at is the track record of the index that the ETF follows. So we like to invest in ETFs that track indices that have been around for a long time because they have a track record of performance, and you really understand how they do in good markets and in bad markets. There are also ETFs now that have basically created their own index to follow, and they don't really have much of a track record. So we generally avoid those ETFs and look for the ones with the longer track record. And if you can find those 4 metrics and get comfort on those, you've got a really great chance of having a successful ETF.
Fees, size, liquidity, and track record. Now we know the key metrics that you look at. Chris Brycki, thank you so much for your time.